What's up, Misfits? Maverick here. Welcome back to the channel. In today's video, we're going to talk about something that's taking the investing world by storm, and that's the Reddit Gamestop trade. Let's jump into it.
Let's come back to the story that we've been watching closely in these markets, namely, we're calling it the Reddit trade for lack of a better term, but certainly the focus on huge short positions that are in certain stocks and the decision to then go long those stocks to force those who are short to cover, squeezing them ever higher. This continues this morning in a crazy way.
All right, so first up, what the hell is going on? GameStop stock has gone from $17 on January 4th, $300 21 days later. Is it really a $300 stock? Well, I guess that depends on whether we're talking about its value or its worth. And I assure you, those mean two different things in the investing. You see, GameStop's value is the sum total of its assets minus its liability. Its price to book ratio, which is a comparison of a company's market capitalization compared to its book value, is over 13 as of today. This is essentially telling us that GameStop is trading 13 times its actual book value. Now, its worth is whatever you can get someone to purchase it for. This is a really important concept to understand when it comes to this stock if you're considering getting involved in what's being called the Reddit trade. In GameStop's circumstance, Reddit decided to target some hedge funds that were shorting the stock. If you don't know what it means to short a stock, this is when a person borrows shares from someone and sells them today with the obligation to return those shares by buying them back on the market. Here's an example. The person's goal is to short a stock at $40, watch the stock go down in value, and then buy it back at $20 to return the borrowed shares. In this example, they effectively made $20 per share. Now, the danger of this type of trade is that if that $40 stock goes up to $60, and now the short seller is obligated to go back out to the market and purchase it at $60 to return the shares, they effectively lost $20 a share. There's a variety of technical ways to do this, whether you're using options, etc., blah, blah, blah. It doesn't really matter. The basics are the same. Short sellers want a stock to go down, and they're screwed when it goes up. This is called a short squeeze. What Reddit did is Reddit set off a tension of trying to drive GameStop stock up and hurt the short traders. Now, that doesn't explain how a company with a $700 million market cap in October now has a $4.5 billion market cap. This isn't a normal experience when investing. Think of investing like buying a house. There's typically an involved process of trying to evaluate what it is that you want. The bank has to do some underwriting to make sure that the home is worth the amount that you're trying to borrow to purchase it. And a home is typically not going to be sold 3 days after buying. Trading is a completely different experience. Trading doesn't need to care about underwriting or evaluate their personal preferences. All trading cares about is if someone is going to be willing to buy it from them in the future for a price that's above what they bought it for. It's a lot more like surfing. Bear with me. A great surfer can look out on the horizon and read the waves. They can sense when a big wave is coming, and they have 3 goals. Find the wave, get on the wave, and get off the wave without crashing. Once they've done that, they just paddle out and do it again. Now, for them to do all of this, they need energy. The energy to paddle requires a lot more strength than simply riding the wave. And they need the wave to have energy. The bigger the wave is, the more the energy, the sweeter the surfing experience. In market context, the surfer is a trader, and the energy is the trade volume. Trade volume is simply the activity of buying and selling a stock. This can be one person with a metric shit ton of money, or it can be a bunch of people with a little bit of money pouring into the same stock. Now, trading is a zero-sum game. There's one winner and one loser, no matter what. No matter what. A trader's goal is to sell while the wave is at its peak, and then bail out when everyone else is crushed by the wave cresting. Nobody knows exactly when this is going to happen, but if you're looking to surf this particular wave, you better have an eye for when it crests, or you could be crushed. So how does something like this happen? Not philosophically, like literally, how does it happen? To explain this, I'm going to turn to our friends over at Fall Guys The Ultimate Knockout, which is oddly a poetic comparison for what's going to happen to some people involved in the stock. If you've ever played Fall Guys, then you're abundantly aware of the frustration that the level seesaw can create. Seesaw is an obstacle course of variously positioned seesaws for each character to make its way across. What happened with GameStop is that the short sellers found the GameStop seesaw, and they stood together on one end, causing their side to drop. This was their goal. Enter Reddit. Reddit traders saw this and decided to stick it to the man in a quirky take from the rich and give to myself type of Robin Hood mission. So they jumped on the opposite side of the seesaw. Because there were more Redditors battling the shorts, the short side of the seesaw started to rise. The news found this to be a wild story and decided they could get some ratings from highlighting the Reddit trade, which led to more people joining the Redditor side of the seesaw, causing the shorts to move even higher. And then other hedge funds and big institutional traders wanted in on the action, so they jumped over with the Redditors and the early adopters. Here's the thing, if you've ever played Fall Guys seesaw level, you know what the experience is like when everyone piles into one side of the seesaw. Eventually, it's just not sustainable, and everybody slides to a gloomy, color-filled abyss. The only way to avoid this is when some people start to balance the seesaw by moving to the opposite side, or they simply jump off entirely. When you've got this many people on it, someone always falls into the abyss. Right now, we're in the people piling on the seesaw, sending the short sellers to the moon phase. I don't know when the seesaw will come back to balance, but I do know that it always does. The seesaw always comes back to an equilibrium. The surfer's wave always crests, and the stock's worth always gravitates towards its value. What's most important to understand about this specific trade is what is going on right now and the reality that eventually the seesaw is going to return to its equilibrium. It does that by people jumping off or by sending people to the colorful abyss. You've got to decide which gamer you're going to be. If you're in this trade, are you jumping off, or you ride or die until you slide off into the abyss? Well, Misfits, there you have it. Hopefully you've got a better understanding of what's going on with GameStop right now and some of the mechanics that exist behind the trade. If you enjoyed this content, do me a favor, click that like button. If this is your first time hanging out with us today, thank you for coming by the channel. Consider subscribing, I sure would appreciate it. And to all my Misfits out there, take care.